I started out my career as a teacher. I decided, almost like you did, as almost like a secret agent, right? You go in not planning to be a teacher for life, same for you, not planning on helping banks get richer for the rest of your life, but really going in and trying to glean, how does the system work currently? Like, what are the holes in the system, and where can I bring my strengths and my skill sets to the table to really improve? So for me, I got in the classroom and I realized, wow, we need more games. We need more interactivity. And then I went on to game design, creating educational games. For you, when you got in there in the financial industry, what were some of those things that you learned that maybe were a little broken in the system?
I saw such bad behaviors, and I don't think that's because most people who work in big financial services are bad people. I think they're good people. I mean, a lot of my best friends, you know, the parents in my community, like everyone, like, you know, there's lots of good people who work in almost any big institution out there. But I saw things like one bank, and I don't want to give too many details. We were working for a bank, and we were trying to study their competition. And we realized one of their competitor banks was making so much money, 80% of their money off of fees, whereas the average bank in that region was making 50% of their money off of fees. And so we did a little bit of a double click to see what was going on, how are they doing it? And they were opening branches in low income neighborhoods and selling free checking accounts at a much higher rate than any other bank. And these free checking accounts had a $40 overdraft fee. And the average customer was paying like 4 of these a month. It was atrocious. You know, it was just awful. And you see things like that in a checking account, which is supposed to be a safe product. And it just really like made my stomach turn, you know, like I would think to be skeptical of a credit card offer, right? Like that's, right. You know, everyone kind of knows you got to be careful with debt and like evaluate things carefully, but you think, oh, free checking, like that's a regulated product, that's going to be okay. And to sort of take advantage of people in that way was really bad. I think another example was in the sort of investment side. Back in the time I was consulting, there was a lot of interest in Forex trading, right? There were all these like Forex trading shops. And again, not I don't want to get too specific, but these firms, you know, the average, like we looked at some of them and had been working with some of them, and like the average deposit per customer at one of these firms was $2,000. And the average profit per customer that the firm would take was $2,000. They literally were just taking people's money. And the way that they were doing it was because people would deposit that amount, and then they'd give them 100 to 1, 50 to 1 or 100 to 1 leverage. And the market would move a little bit. And the market there in Forex would just kind of tick back and forth, and it would tick just enough to wipe out their account. And then it would like tick back the other way. And the firm would never pass the trades on. They would carry the opposite side of everyone's trades on their balance sheet. So, you know, that just felt like a really gross business. And, you know, by the way, those practices are not all in the past. You know, we see a lot of those kinds of things going on in, say, like I think there's a lot of great, really exciting things happening in crypto and Web3. Like I personally am invested in some of those projects because I think they're really exciting and inspirational. There's a lot of bad things happening too. Like there's a lot of like really fraudy, like kind of nasty stuff out there. So, you know, picking and choosing who you invest with and why and how, like, and understanding it, you know, I think remains as important as ever.
One other question I did want to ask you was, you had mentioned that you spend a part of your time investing in various other asset classes. Obviously, you know, you like real estate. What are some other things that you're investing in? I'm curious to pick your brain, what you see coming down the horizon over the coming next couple of years as an asset class that maybe some of our listeners should be looking at, and why.
So most of my net worth remains invested in Betterment. I should be clear about that. And that as an asset class has a high correlation to the public equity markets, right? So of all the funds invested in Betterment, I think 70 to 75% are in equities, globally diversified equities, but like, you know, like a high correlation to US stocks. The other 25 to 30% is in bonds of some sort. It could be munis, could be treasuries, something like that, but cash. But so in my personal investing, because I have this like one concentrated bet with a high beta to the US stock market, I'm doing like not that much stock investing, right? Like what I am doing is not necessarily what I would recommend for a person who doesn't already have, like 80+% of their money in a highly, stock correlated investment. But so I'm trying to diversify, and I'm thinking, well, real estate's great. Like this is, it's got a good yield. There's no yield in bonds. I feel like if there is inflation, then my rents will go up. Hospitality has the same dynamic. I feel like, it'll keep pace with inflation. Cap rates are low, right? Like relative to long-term averages, which makes me a little bit uncomfortable, but I think it's still, better than I'd get out of buying, I don't know, tips or, like if I'm looking for yield, that's kind of like the best thing out there. So I've done some of that. I've got a company that I have invested in that I'm excited about. That have you heard? I'm sure y'all are familiar with like the iBuyer world. These folks who allow you to say buy your next home before you sell your current home. They'll give you like a 45-day financing, so you can put in a cash offer. Right there's cash offer folks. There's iBuyers. There's buy before you sell. Slightly different uses of similar concept. Those companies that provide that kind of short-term financing need capital, right? It's not a mortgage, right? They're giving capital to buy a home. It's real estate backed, but it's not a mortgage. So banks can't do it. So who does that? So I've got a company that I work with called SetPoint that's doing that. And so I'm an investor and an advisor there. That's like, I think that's just great. I think that's an interesting asset. It's real estate backed, but and higher yield than a mortgage. Another is doing, another fund I love is doing, when a developer in New York City stops work or something, and like a building is just like left hanging out and like nothing is happening, all of a sudden, like sort of like, the debt starts accruing on those buildings. And like a friend of mine from business school, like goes and buys the debt on those buildings, and then like works it out with the developer to basically like get them to come and like pay off their back debt or sell the building. And so it's like another sort of like real estate secured, most of these are like developers who own multiple buildings in Manhattan and, or around, and, it's all these like sort of court systems workings. It's like, it's like really like the thing you're investing in there, but it also feels like a good asset class, especially if you, like I am a little bit worried about the sort of like overall valuations. And, even though we've seen a bit of a correction, I remain concerned about where the market is. And so like looking for those opportunities on the sort of downside and that offers some downside protection, I think are interesting. So those are some of the things I'm keen on right now.